Good morning to all traders and welcome to today's market insights video. It is Thursday, the 25th of June. We saw yesterday the sentiment shifting once again. We went from dollar bloodbath on the Tuesday to a reversal on Wednesday yesterday, as there seems to be now. As we said yesterday in yesterday's video, that the stimulus talks the other days finally started being realized by the markets and supporting the US dollar. Equities fell, gold fell, euro, dollar, everything actually fell against the dollar. So yeah, I thought it's a very good opportunity to look at which of the weakening currencies are actually good to pay attention to for the day on the FX miners video. So euro pound is the first to check, right? Because, well, I do wonder which one was stronger yesterday, and it seems to be the euro. The question is this going to go for a long time, or are we going to see prices moving lower? And the other one I wanted to speak about for the day is the USDMXN against the Mexican peso, and also the Turkish lira, because we have interest rate decisions coming in today, and these are going to create some very good moves on both the pairs. Now, on the calendar, we are not really looking heavy today. We have the USGDP, of course, is going to be the highlight for the day, as well as the US durable goods, which going probably overshadowed by the GDP, as well as the jobless claims, which will have an effect one way or another, in my opinion, because the situation with coronavirus in the US is getting worse. And it seems to be now that all these first attempts to reopen the economies and businesses are now being dumped, actually. And the US, they are considering again, they are actually putting a brake on reopening as the COVID-19 cases hit new records. Okay, I'm not going to take more time on the fundamentals of economics or geopolitics or the COVID itself. So let's just go on the chart straight away. EURGBP, we talked about this move, I think it was last week, right? We were looking at this becoming either an ABC ending up here, right, and then moving all the way down. Or we also talked about the opportunity, actually was, yeah, the X was down here, right? Also, we talked about the opportunity, this moving higher and then just retracing back to previous lows over here around 0.8850 or so to take out wave X. And since then, we are seeing prices moving up. Now, this looks to me like an ending triangle in wave Y, right? Now, we've had 1, 2, 3, 4, and most likely we're going to get another move to the upside to take out wave 5, and that will be Y and B as well at the same time, and then start looking for prices to move lower. Now, if we take this Fibonacci extension tool, we can go up to the 0.9105, a very good level, psychological level, to start looking for sells, as well as, a Fibonacci confluence level as well, because we also get the 50 Fibonacci here near that level at 0.9087. That's the 50 Fibonacci of the bearish leg down, right? Now, worst case, we're going to get up to 9170 or maximum 9184, but I don't really see more upside than this level, okay? And from there, we can start looking for prices to go lower. And that I say because this is an ending triangle. So we're not really looking for prices to extend much higher than this, but a little bit higher. So anywhere between the 90.87 and 91.84, I know it's a big range, I will be looking for prices to start receiving exhaustion signs first, and then move all the way to the downside for potentially fresh lows below the 86.70 or so. And just as a reminder, we are looking at this as a 1-2, okay, or even as an AB. NSE, okay? Either case, we are looking at prices moving lower for a fresh low, and this is what I'm looking as an opportunity. So I would be looking for this trend line to break, yeah, and then once we receive a validation with a retest, looking to sell for the 86.78 at least. Now, let's go on the dollar against the Mexican peso, and then we're going to look at the Turkish lira as well. Now, over here, we're looking at this chart as well. We are in wave 4, right? So we're looking at this to stop correcting at some point and then start moving higher for wave 5. We were expecting prices to end around the 22 level, if I'm not mistaken. However, we extended it a little bit lower. Well, it doesn't really make a difference to our view. It's just that at the level that we go down to, this is the 1.5 Fibonacci extension of waves A and B, right? And at the same time, it's very close to the 61.8 Fibonacci retracement of the upside leg as well, around 21.27. But we did miss that level, right? Now, that can mean two things, right? One, we ended the correction with a miss, and that is going to take us higher for wave 5. That would suggest that we are in wave 1, wave 2. This is going to be a multi-structural wave 3, okay? So we're in the midst of wave 3 now, but in a smaller degree, we are 1, 2, 3, 4. We're going to go up for 5, okay? Actually, this is not, because it's interacting, this is 1, 2, then we're going to get 1, 2, 3, 4, 5. That's going to be 3, then 4 and 5. That's going to be 3, and then 4 and 5, okay? Multi-structural move to the upside. If that is not the case, then what we could see, okay, and since we want really the 21, 27 to be taken out, or even the previous wave 1, which is at 2097, we would want to see this becoming an A, B, C, which is a W, then an X, and then a Y for potential fresh lows, right? And we could also see this as a corrective move as well, because this wave, well, when prices move like this, we either get a multi-structural degree directional move, or we get a correction. It does look corrective as well. So it could be an A, B, and a C. And that could be 1, 2, 3, 4, and 5 as an ending triangle as well, right? So we're probably looking at prices to go around 24 or so. Actually, maybe even the 23.62, which is previous wave 1, and then start looking for prices to move lower. If we break higher, it means that we'll have multi-structure move to the upside. If we get a resistance here, move lower, and then break below the 22 as well, we're most likely looking for W, X, and Y. Okay, and quickly Turkish lira as well. Well, it's moving as we expected, similar to the Mexican, to the USDMXN, but here I'm seeing this as an ABC, so I'm expecting more downside, and I will explain why. Because this looks very corrective. It's nothing to do with multi-structures, okay? So, well, being up here for wave 3, again, we expect wave 4 with an ABC, right? Now, here's A, here's the B. It looks like a W, X, and Y, or it could be even a triple zigzag. We can expect more upside, okay? But look at this divergence on the RSI. It might be a sign that prices might not really move above the 6.97 or so. I would expect them definitely to stay below the 7 psychological level, okay, to move to the downside. And then expecting for a fresh low below the 6.68. Now, truth is, and let's just get our Fibonacci tool over here, if we assume we get to 0.5, right? So the level to look next is the 6.6, which is a 61.8 Fibonacci extension, or the 6.3, which is a 100 Fibonacci extension, okay? I wouldn't think we're gonna go much lower. And then from here, we can probably start looking for some clues, some signs, I mean on the RSI ideally, to start moving higher again to take out wave 5. So this will be all for the day. Thank you very much for watching, and I will see you again tomorrow.